Hey, good morning, people. Hope you're all doing well. Welcome to the live update here this morning, Tuesday, February 6th. Hope you're all doing well. Had a good session yesterday, and we've got the rest of this week shaping up. So the main thing that I do want to talk about today is going to be China, right? Chinese names. The overall Chinese market on the overnight session rallied pretty aggressively, right, up across the board here, and there are, right, some hopes that are building up for the potential rebound or the turning point in the Chinese stocks, right? So you can see here, this is the Hang Seng Index, HSI. Let me just see here. If we can look at these futures. Yeah, I think these might be the futures. So the futures are up pretty drastically. You can see this massive green candle here, right, that have shaped up so far. Very nice pop on this on the overnight session. And there is the potential that we might be bottoming out in these Chinese equities after a drubbing that erased $7 trillion from the mainland equities and shares in Hong Kong since the peak in 2021. $7 trillion is a lot, right? A lot of market cap to get destroyed. An expected rebound from strict zero COVID measures has failed to materialize, prompting policymakers to consider new ways to stabilize the stock market, with risk to consumer confidence threatening another downward spiral. So Chinese equities market followed up a very weak 2023 with another 10% loss in the first week of 2024, and now trying to really pull back on this aggressively. So you can see here, where's the start of the year? So the start of the year, right, 17,180 or so, we dropped down to the lows of these futures around 14%. Now, from the beginning of the year to about now, we're only down, right, about 6%, 5.5% on the Hang Seng. So there are some growth challenges naturally, right? A lot of people are looking for China as this is it, this is the bottom, it's time to buy China, while there are still some challenges ahead. Two other major issues were recently flagged that highlight the problems facing the world's second largest economy. Evergrande, the world's most indebted property developer, was finally ordered to liquidate last week, spelling further trouble for Chinese construction industry, which accounts for as much as a quarter of the GDP, right? It's a very large figure. A longer-term growth issue is related to demographics, while China's shrinking population set to sap the nation, a key source of labor and demand. Looking at the end of the country's stock market route, fresh reports overnight suggest that Chinese Security Regulators Commission and other regulators will soon update top authorities on a range of policy initiatives. China's blue chip CSI 300 soared about 3.5% on the news, while the small cap equities recorded an even bigger bump, and the CSI 1000 index jumped 7%. Support could range from direct stimulus measures to those geared towards property stabilization, but investors sizing up the situation will be looking for concrete actions or coordinated responses to kind of mellow their concerns. It's very interesting as the equity market, the U.S. equity market, continues to press an all-time highs, and a lot of this is not kind of seeping into the U.S. equities, right? Will it impact the U.S. equities? Fed Chair Powell touched on the matter during the 60-minute episode that was aired on Sunday, saying China had moved away from a market-led growth model in favor of state-owned enterprise, and that was still too much associated with the real estate investment. He also pointed out the economy relations are not deeply intertwined with American financial systems, but rather mostly consist of the U.S. buying Chinese manufactured products. As long as that is the case, that would mean that minimal implications, right, according to Powell. So we may feel them a bit, but they shouldn't be that large, is what he was quoted as saying. So there's some other stuff out of the SEC, right, when we switch waves to the U.S. before we take a look at some of these earnings that might have come out last night. There's some new rules, right, aiming to fix structural issues in a $26 trillion treasury market. The SEC is expected to adopt a rule today requiring proprietary traders and companies that regularly deal in U.S. treasuries to register as broker-dealers. So this new rule and a recently passed requirement for hedge funds to clear more of their treasury trades centrally are aimed at boosting regulatory oversights and would mark the biggest overhaul of the market in decades. So some concerns have also been raised. Those include the increasing costs needed to participate in the industry, as well as unnecessary regularity burdens on pensions and risks on major liquidity drains, among others. So the U.S. 10-year has been pulling up, right, pretty drastically since we kind of bottomed out on that Fed meeting that was last Wednesday. Right now pulling back up into some of these areas. I think there could be a little more upside before I can look for some shorts to see these 10 years back into that 3.5, 3.7 area. Bonds generally, right, TLT ETF has been slumping pretty aggressively over the past few weeks here, right? And we might have topped out in this after nearly hitting $100, or I think we did hit $100. We did $100. This was over at the end of December before pulling down. Now, one of the main figures that reported earnings yesterday was Palantir. Palantir was one of those names in 2021, 2022 that a lot of people were playing with. A very volatile, lower priced individual name, gapping up pretty aggressively after earnings, right? Nearly 20% on this rally on the Monday as the enterprise software company's Q4 revenue topped expectations. Our results reflect both the strength of our software and the surging demand that we are seeing across the industry for AI platforms. That's what the CEO said. Our U.S. commercial businesses continue to be significant drivers of growth, a trend that we expect to continue, right? There was mixed guidance issued for 2024 and not exceptional as of now. Palantir is not showing AI-powered hyper growth. So when or if they start entering into that sector a little more aggressively, this becomes a pretty strong opportunity that allows for more upside as this bubble continuously expands. Right? You can see NVIDIA, how NVIDIA has been running, just continuously trading 700 here pre-market, and there's even more growth on this as we expanded outside of this larger distribution, which happened right at the beginning of this year. NVIDIA alone this year, right, I don't know where the start of the year is, we can say somewhere here, is up about 50%, right, 45% just from the start of the year. So that's incredible gains, and there's probably more expansion on this, right? Where will NVIDIA pull back? A lot of people caught out on the short on this continuously, and now look at what's been going on. So let's take a look at the U.S. equities here as we have it. The S&P and the NASDAQ, we'll go through both those as we get ready to open up our live trading room this morning for our members. So when we look at the U.S. equities, we'll start off with the NASDAQ here. The NASDAQ is holding out within a large distribution, right? The large distribution on NASDAQ, as you can see, is between this 730, 740 top area, right? There's another resistance a bit above, but as long as we try to move back above the 730, 740, realistically, this could open up a bid that could make a new high on NASDAQ running towards the 18,000 level. Now, anything back below this area, right, you have to watch out for 660, 670, which is going to be an important region, and then down a major pivot that's kind of in the middle of this distribution is 630, 640. I think if we lose that again, we're probably going to start running a little lower to clean up, right? We've got an auction to clean here and an auction to clean here that could bring us back down to that 400 level before any kind of reversals. I'd be a little more cautious into the long side today. I think that, yeah, yesterday, especially if you take a look at what happened on the S&P 500, we managed to kind of drop into a distribution and then run back outside of it to close out, right? A key pivot is 56 to 58 on the S&P 500 futures, now rallying off that level, trading into the 70. As long as we're above that level, I think it is a little more difficult to look for shorts. There have been continuous failures to accept higher around that mid-70 and that mid-80, I would say, are two areas where sellers can appear. But we've tried to push lower. They couldn't accept lower. They've rebid off these key levels. And it gets a little more difficult for these shorts to kind of breathe and live, right? They had their chance yesterday. They got reversed very, very aggressively into the close. So it's going to be something that I'm going to be monitoring throughout this session to see if we can actually go back, tag into that mid 50, actually accept into that mid 50 to get that cleanup lower to trade into those 30s again, right? I'm not saying I'm super bearish on the day. I'm not saying I'm going to continuously sell rallies. But what I am saying is I'm going to be careful on this long side to see if any sellers appear as to where they did yesterday, right? That mid 70 is that region to kind of beat, right? That area is that area to hold out for the sell side. Otherwise, we're most likely just going to trickle back into all-time highs and we're going to get that stronger rip. NASDAQ with tech is a bit weaker. Tesla's down today, so I'm going to be cautious on the long side. I'm going to be looking to see if this like mid 70 initially on the S&P 500 futures holds out as resistance to see some sell side. Otherwise, right, we could be just trickling back up to the upside and holding out. If we can't hold that level, I just think that we're probably going to run back into highs, possibly even trade 5,000. I'm not trying to call tops on this market, right? As I said before, I'm just going to watch how distributions trade. And if there's no real acceptance back under the like mid 50s, well, then realistically, it's probably not going to turn anytime soon, right? Especially with the failure to accept under that lower 30, 49 lower 30s on the S&P 500 futures. There is less of a probability that we're going to see too much of the downside kind of opening up here. So that's what I'll be looking at today. That's kind of what I'm shaping up for the trading session to see how this thing goes. Let's open up our live trading room here. I'll see you guys all in there. Keep an eye out. We might stream maybe this week, maybe next week, one of these sessions. So hope to see you all there. Check out TradeProAcademy.com. You can check out community.TradeProAcademy.com for our free Discord, and I'll see you guys all in there. So thank you guys. Thank you. We'll see you the rest of the week, and happy trading.